Hi everyone, and welcome to this video where I'm going to talk about the cash cow income strategy and specifically a blueprint and package for turning $1,000 into as much as $47,000 in your first 12 months. Now, this is a blueprint that is designed to not just turn $1,000 into as much as $47,000 in a year, but it is designed to do so in a relatively safe manner compared to a lot of different strategies that are on the market today. And the power behind the cash cow strategy blueprint for growing your account by as much as 4,600% in 1 year rests in three powerful principles unique to the cash cow strategy that I want to kind of expand on in this video. And the first one is that the cash cow strategy reveals opportunities that carry substantial annualized returns. And I do mean substantial annualized returns. For example, a recent trade in Piton produced a 997% annualized return. A recent trade in SRPT produced 2,363% annualized return. A trade in CLS produced an annualized return of 2,524%, and a trade in KRE produced 1,804% annualized return with a type of cash cow strategy. But one of the best trades that I've had with this approach is in the stock AMC. And a lot of people know this stock because it was the beneficiary of the meme crowd way back when and pushing AMC to spectacular levels. Unwarranted, but nonetheless pushed them to spectacular levels. Well, in this particular trade, this was long after that, after AMC had come crashing back down. And this trade produced a $7,680 profit in a matter of about 10 days. Actually, a little bit less than, actually about 14 days. So in about 14 days, we produced a $7,680 profit. Now, I was doing a trade size of 60 on this one because this was a really spectacular opportunity. And so I did increase the trade size just a bit. And this produced an unheard of annualized return of 6,163%. And that's one of the best ones. This is going to be an outlier. It's not going to be common, but what you will see is you will see common opportunities that will carry as much as 1,000% annualized return or more with this approach. And if you combine these type of annualized returns with a risk limiting filter, and that's so important for the cash cow, you're combining these types of annualized returns with a risk limiting filter. And if you do that, you have the recipe for serious potential growth. That brings in number two, implement a risk limiting filter. So the way that this works, and I'm not going to go into the details of the strategy, but rather the results of how this risk limiting filter works. So the cash cow strategy specifically trades only stocks that provide extremely limited risks long term. Meaning if you pick a stock and you say, okay, I'm going to apply the cash cow strategy to this stock week after week after week after week after week, then you have a very, very limited risk long term, even if the stock crashes at that point. So what we're doing is we are limiting the stocks in the cash cow strategy to those that provide that particular benefit. So if stocks crash, your risk is absolutely limited by only trading stocks that meet our special cash cow strategy criteria. And again, this is going to be fully revealed. The strategy is fully revealed in video session 1, and then I add on to that in additional video sessions, which I will get to here in a second. Nevertheless, to give you an example, if you have a $1,000 account and you begin applying the cash cow strategy to one stock that meets our criteria, just one, the maximum risk on the trade is going to be $100. Now, it's going to vary. There are going to be some where the maximum risk is $50, somewhere it's $75, somewhere it might go into the $125, maybe $150 range. I rarely see an opportunity that has $150 maximum risk, just because of how we set these trades up. So most of the time it's going to be $100 or more, which you will see here in a minute. But we'll say the maximum risk on the trade is $100. Well, the way that this works and how the trades are set up, you can only lose a total of 4 maximum losses in a row, which is extremely unlikely. Like really, really unlikely. Even if the stock goes bankrupt, you're probably not going to suffer 4 maximum losses in a row. In this particular example. Now, some stocks it might be you might have the ability to lose the maximum risk 5 times in a row. I rarely see 6 times in a row where that's possible. Not that you do. I've never ever suffered the maximum loss trading a single stock 4 times in a row. And I've been trading cash cow for several years. So this is something where we're taking a pretty strong strategy as far as the long-term probabilities of success are concerned, and the risk, limiting the risk, and further limiting that risk by how we play it. And in the situation where you would lose 4 maximum losses in a row, the stock would basically have to go to bankrupt during that 4-week period and straight to zero. And the way that these works is that if a stock declares bankruptcy, or if there's the potential to declare bankruptcy, that usually goes on for months before the stock actually goes to zero. And the amount of money that can be made from that stock alone is amazing. You would think that that's a bad thing, but that's actually not a bad thing for the cash cow strategy. And just to kind of give you an idea, way back, if you'll remember, JCPenney's went bankrupt. It took a long time for that stock to go to zero. It was going down, 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 down. Eventually, it entered the criteria for a cash cow play, and there was months and months of making money with JCP during bankruptcy. Same thing with Hertz. Unbelievable opportunities existed with Hertz for months, many months, because they were going into bankruptcy. So it's not necessarily a bad thing, and the things that have to happen are very, very rare. So if it is possible, right? It is possible, but it's just not very probable. Now, that doesn't mean that you can't go 2 winners and then a loss, and then a winner and then a loss, and then a winner and then a loss, and then a winner and then a loss. I'm not talking about total trade. I'm talking about maximum losses in a row. There are going to be winning trades in there, or the losses are going to be really small and not the maximum loss. You can suffer 4 losses in a row, but it's not going to be the maximum loss. So, for example, if you have a $100 max risk, it might be you might suffer a $25 loss, and then maybe another $25 loss, and then maybe another $25 loss, and then maybe another $25 loss after that. So there's that is possible, but the maximum risk, if it's $100 for as an example, it's impossible to suffer that max risk 4 times in a row. So your risk is very small and it's very limited, and the key is to be consistent with it. And that's going to bring in the next principle behind the cash cow approach, which is adding to it the most powerful compounding strategy on the planet. Now, you have to understand a few things about compounding. And if you're new to my approach to trading, you're in for a massive eye-opening experience, because most of the industry ignores this. It is the most powerful thing you can do in trading, and It is the most important piece of the puzzle. It is the only way. Anybody listening to this call, anybody listening to this video, watching this video, I promise you with everything in me, the only way 99.9% of you will ever achieve wealth through trading is because of the compounding. And if others, there might be some that get lucky after a couple of years, but most likely they're getting lucky and they're compounding it. They're just being completely reckless with how they compound it. Most of the industry has no clue how to properly compound. And so they'll compound, they'll achieve huge returns, and then they'll give it all back when the strategy stops working. That is not the type of compounding that we implement with any strategy. It is very, very powerful. And I'm going to give you a couple of examples here. And the cash cow strategy is a perfect strategy for compounding. And it is the most powerful compounding strategy on the planet, and it will produce exponential growth in your account if you can average just a little bit of money every week. And here's the example of what is possible with the cash cow strategy combined with my powerful compounding strategy. Now, with the cash cow strategy, you're not going to make a lot of money on a week-to-week basis, on a trade-to-trade basis. To create small risks, we generally are going to have to settle for smaller gains. And this is why most people don't even consider the cash cow type strategy, because they're so used to traders promoting these home run hitting strategies. Oh, I made $5,000 on this trade, and I ran this stock from $1 to 50, and this and that and whatever. That's not what we're doing. Those are, if you are successful with any of those, you're lucky, because they don't do very well, or you suffer a lot of losses in between, right? But what we're doing is we are focused on the compounding first, and I'm going to explain that more here in a second. So with the cash cow compounding potential, if you only average just $25 a week, which is going to be about average in a lot of these approaches, about $25 a week, one trade, 1 week, you're talking about conservatively. Okay, so there are two types of compounding strategies that I'm going to be talking about in the cash cow package in the videos. The one of them is a conservative approach, and the other is a more aggressive approach. All right, so this is the conservative one. And if you apply the conservative compounding approach, you're talking about, and you average just $25 per week, you're talking about turning $1,000 into $17,900 in 1 year. And in 2 years, $67,600. And in 3 years, $152,000. And in 4 years, $270,000. And in 5 years, $422,000. And that's if you average over the 5-year period just $25 a week, and you apply it according to the principles and the strategy that I reveal to you. This is math. It's not an if. Now, it might not be exactly 422,000. It might be 412,000, or it might be 430,000. But you're going to be really close to this number if you average $25 per week for 5 years and you apply my compounding. So consistency is the key, but the compounding is where the wealth is built. Now, as you get a little bit more experienced, and as you get a little bit further down the road with this approach, you might want to switch from a conservative compounding to a more aggressive compounding. And I talk about this in the videos. And so a more aggressive execution, you're going to want a little bit more in the account. But if you're making money with the cash cow, you start with $1,000, and you're making money and you get it to $3,000, $4,000, $5,000, then you can start the more aggressive, right? But if you start with $5,000 and you just start with the more aggressive execution, you're talking about turning a $5,000 account into as much as $84,500 in the first year. That's almost double what I talked about in the blueprint and the title of the blueprint. And that's because I am giving you a mixed combination. So you're going to start off with the conservative compounding as you experience success, and you have a lot more comfort in what you're doing and how you're doing it and why you're doing it. Then you can switch over to the more aggressive compounding, and the $47,000 is actually kind of a conservative number there. But if you can average $25 per week, you're talking about 84,000. So with the 47,000, I actually lower it and say, listen, if you only average $20 a week, and you go from conservative, then switch over to aggressive, but you're averaging $20 a week after 1 year, you'll actually grow it to over $47,000. But if you start off with aggressive, 84,000 after 1 year, 338,000 after 2 years, 760,000 after 5 years, and 1.3 million, or excuse me, after 3 years, and 1.3 million after 4 years. That's unheard of. Now, you might get into a liquidity issue here with regard to trade size, and I'm going to deal with that as well, but that's a problem that I hope you have. I really hope you run into that problem. And I'm going to show you how to get around that problem. Again, it's all in the videos. So if you can average more per week, those numbers become even more crazy. Now, it's unlikely that you're going to average more per week if you start with one stock. You might be able to increase that average if you add a few more stocks into the mix. So let's say you, instead of trading one stock, you start trading 3 stocks every week, according to the cash cow strategy. Then it becomes a little bit more crazy. And also, if you average lower than the 25 weeks, it's still tremendous growth. So if you average only $15 per week, it still compounds dramatically. 1,000 grows into $152,000 after 5 years. And that's conservatively, not aggressively, conservatively. So just averaging $15 a week. That would be, instead of averaging $25 a week, that produces $422,000. So the growth comes down a bit, but it is still dramatic and significant and far more realistic than taking that $1,000 and putting it into anything else that's not using the compounding. All right. Now, if you average more, let's say you average $35 a week, then $1,000 actually grows into $828,000 in just 5 years, conservatively. Again, instead of 422. So by adding just $10 per week, this is the power of compounding. By adding just $10 a week to your average, you double your overall return after 5 years. It goes from 422 to 428, or 828. That is phenomenal. So it's all about the compounding. The most important thing you need to understand about this strategy is that it is a means to an end. The strategy is not a holy grail strategy. It's a consistent strategy that uses limited risk and puts the probabilities in your favor to average a small weekly gain on a very simple type of trade. So, for example, caffeine. A lot of people are kind of addicted to caffeine. So the question is, which is your consumption preference, right? Is it coffee? Is it tea? Is it Coke, Dr. Pepper, energy drinks, maybe cocoa, or maybe some of you even take some energy pills, some supplements that have a lot of caffeine. I tell you what, I was taking a supplement, I think it was called Guardana or something like that, and after about 2 weeks, I was getting a headache every single day. And I didn't realize that there's a ton of caffeine in that stuff, right? So a lot of people are looking to get caffeine into their bodies. The question is, in what manner are you going to do it? And that's the same thing with compounding. The goal is compounding. It is not the strategy. The strategy is a means to an end. And so the cash cow strategy is a great strategy specifically designed to enhance the compounding. Same with my cash flow strategy that focuses on the stock indexes. Same with any kind of swing trading strategy. So you might have a short-term swing trading strategy where you're focused on short-term gains. You might use that, but it's got to be the compounding that creates the wealth. Some of you are day trading. You absolutely 1000% should be using a proper compounding strategy. Some of you are big iron condor traders. I'm not a huge fan. Doesn't mean that you can't make money with them, but if you are making money with them, you should be compounding it. And then again, for example, my super portfolio rotation, we do compounding, but with that one, it's not as efficient. And so each of these strategies have a different efficiency for compounding, and the cash cow strategy is one of the more efficient methods to compound. Same thing with this. For example, coffee is more efficient than Coke. Energy drinks is more efficient than coffee. And pills are more efficient than energy drinks in delivering caffeine. So cash cow is a tremendous strategy for implementing the compounding. That's why we do it, and I want to be very clear about that. It is so important. So the cash cow strategy is not only one of the best strategies for maximizing the eighth wonder of the world, which is compounding, it is also one of the simplest strategies you will ever trade. Literally, once you get going on this, it's going to take you less than 10 minutes a week. It is boring. It is simple. It is not complicated in any way, shape, fashion, or form. There are some nuances. There are little tricks and tips of how to maximize your efficiency with the strategy itself, and I go over all those in the videos, but it is really a simple strategy. And the strategy is focused on exploiting the numbers. Everything in trading is a numbers game. Everything in trading is a numbers game. And the key to success with the cash cow strategy is to play the numbers properly. And part of that is the compounding. Part of that is also how you approach the strategy. And so the goal for you is to consistently make a small average return each week with a low risk strategy and then maximize the growth through compounding. That is your goal. Our goal in providing this is to fully equip you to experience exponential gains with a very simple strategy that properly exploits the cash cow opportunity. And so here is how we are going to fulfill our goal. Here's how we're going to achieve our goal. Number one, the cash cow strategy is fully revealed. Okay, it's fully revealed. We do this through a series of videos, and by the way, depending on when you're watching this video, I am recreating them brand new live, and you'll have an opportunity to attend the live sessions as I'm doing them. If you're watching this video a little late, after I've done the live sessions, then you'll have the videos. But they are fully revealed. I provide a cash cow blueprint for this, and then one other thing which I'll get to here in a second. But the cash cow blueprint is a 23-page blueprint that talks about everything you need to know. It's a quick go-to guide, if you will. So it explains the logic, but you're going to be able to quickly reference different pieces of that blueprint as you're looking at different opportunities to help remind you exactly what you're looking for and why you're looking for them. And so this is a tremendous blueprint, talks about the compounding, gives the conservative, gives the more aggressive compounding. It is in written form a shorter version of what you're going to receive in the videos. And so this 23-page blueprint gives you everything from the logic to how to enter, how to exit, and most importantly, how to properly compound a small account into a potential 5-figure income your first year. Then we as I mentioned, talk about the cash cow strategy through a brand new video series, or if you're watching this soon enough, early enough, you'll actually be able to attend those live. Here's what those videos are going to include. What is the cash cow strategy from A to Z? Everything is revealed. We're going to talk about picking the best cash cow trades. We're going to talk about entering the trades. We're going to talk about exiting the trades, rolling the trades from time to time, and then tips and tricks for maximum success, which I already mentioned, and then compounding for exponential growth, including how and when to switch from the conservative compounding to the more aggressive compounding, and or whether you should start with the more conservative compounding or whether you should start with the aggressive compounding. A lot of that will have to do with the experience. I get into that in detail in the videos, and you will come away with a full understanding of the cash cow approach, how to implement it, and confidence to take the trades. Now, that's not all we're going to do, though. We're also going to include, this is brand new, we're going to include 6 months of daily cash cow scans. In other words, you're not going to have to go out and look for these trades. We're going to give you, there are approximately on any given day, in any given week, there's approximately 20 to 40 opportunities that I would consider taking. And they are ranked. They are ranked by the annualized potential, and I should say potential annualized return. Now, you saw, right? You saw 997% annualized return, 2,363%, to 2,500, 1,800, and then finally this is an outlier, but this was a 6,163% return. Actual fills, these are ranked, so you will see that they are common. Here's 2,700, 2,700, 2,700, 2,200, 1,900, 1,700, 1,700, 1,600. All of these massive annualized returns are available. You have the symbol, you have the price of the underlying stock, you have the expiration that we're going to be using, you have the short strike, you have the long strike, and that's what it is, just a simple option spread. And then we show you the credit, the break even, right? The credit, the break even, the at the money return. So if the market goes nowhere, what is the at the money return? And this ROR is a return on risk. It is not annualized, it is a return on risk. So you know what your at the money return, if the market goes nowhere during the life of the trade, you're going to receive a 67% return on your risk on this trade, right? And so then you can take a look at the max risk. You can see here most of these are below $100. And again, every now and again, you might see one that has a $150 risk. You might see one that has a $120 risk. Maybe here's 121, 122. But you can choose lower risk trades, most certainly, and then implement those on a consistent basis. Or you can choose, some of the bigger risk trades that are also going to generally give maybe some bigger average gains. It's on a trade by trade basis, but nevertheless, this scan is given to you every single day, and there's actually 2 pages of it. So this is page 1, and then you have another page that has these that are utilizing a different expiration. All right, so you're going to get that every single day after the markets close, and be able to plan out your trade. And we do this every single day, not because you're going to be trading every single day, but because you might exit a trade on Tuesday and you want to immediately replace it, and you're going to see what trades are available. Or you might exit it on Thursday and you want to see exactly what trades are available right then. So we give these every single day so you can be as efficient as you possibly can. And these are the types of trades that are revealed and taken. I take these trades all the time. It doesn't mean that every trade is a winner. Every trade is not a winner. You'll see a probability here and they average around 70%. And so you are going to have some losses, and sometimes these are, these aren't hard coded, but they are pretty accurate. You're going to be between 65 and 75% is what is a realistic expectation with this approach. It doesn't mean that that's exactly what you're going to experience, especially if we get into these and stocks as a general rule trend down week after week after week after week after week. This might not quite be 75%. So there is a little bit of market action that's going to come in here and kind of dictate exactly what happens. But the risks are extremely small and extremely limited. This is not going to blow out anyone's account unless you absolutely screw up, either with a trade or with your trade size. And I quite frankly, I just don't know how you can, if you follow the rules, you follow the strategy, you're not going to blow your account out. So with that, here's what you get. The Cash Cow strategy is fully revealed. You get the Cash Cow blueprint, brand new Cash Cow video series. I think it's a 4-part series, and 6 months of the daily Cash Cow scans for $9.97. If you were just buying the 6 months of daily Cash Cow scans, you're talking about $4 per scan, basically. It comes out to about $4 per day per scan. We're not going to do that, though. For a limited time, we're gonna improve this 2 different ways. Number one, we're going to go to 12 months. We're going to go to 12 months of the daily Cash Cow scans, and then we are slashing the price to $4.97. So you get all of the videos, you get the blueprint, you get the 12 months of daily Cash Cow scans for $4.97. And that comes to just over $41 a month for everything. And the Cash Cow strategy fully revealed alone is $4.97. So you're basically getting the Cash Cow daily scans for free. You're getting the blueprint for free, and the quick reference blueprint for free. And you're basically paying for the Cash Cow videos, and everything else is kind of like a bonus. The 12 months of daily Cash Cow scans is just like a big bonus. So this is for a very limited time. You can call Spring or Candace at 918-203-7547, or you can click on the link below. I strongly encourage you to get on board with this strategy. It's a great strategy, even if you don't trade it as a main strategy, because it's only going to take you 5 to 10 minutes a week. You can at least implement it on the side in a smaller account and just see if it doesn't grow. Follow the compounding and see if it doesn't grow. It'll probably outperform everything else that you're doing, quite frankly, if you do it properly, and provided that you don't start when stocks are going into a long-term bear market. So, but even then, risks are very limited. So get on board, and I look forward to seeing you on the videos.